Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances, and you need to decide for yourself whether it's appropriate to you. Okay, so our market today gave back most of yesterday's gains, closing in just at that 7100 level, or just below that. 71 is a key level to our market. We've been waiting for that to break for about a month to 6 weeks now. We've popped up very strongly, tested the all-time high levels yesterday. Okay, so we actually closed into the highest close on record, but we didn't hit the intraday highs that we saw back pre-COVID. So look, we're still primed to potentially test those levels again and even perhaps create another new all-time high for our market. But at this point in time, obviously, with a bit of sell-off that we're seeing today and the negative futures, it does put that question mark of whether we're getting that May type pullback early or not, right? It's way too early to tell. What I will say though is the Nasdaq is looking likely that it could be going for a bit of a correction. So if I just jump across to the Nasdaq chart, you can see here already that's fallen roughly 6%. It's coming back near the uptrend line, and obviously it could, if it does keep going through, 10% correction is back around this support level that it's held the last few times and it's pulled back. So look, that's on the table, right? And it does make a lot of sense considering, the Nasdaq did and those types of stocks, which is, tech stocks, your discretionary stocks, and your communication services stocks, they all outperformed throughout COVID. Okay, and now we're coming to the other side of COVID and value starting to shine. It does make sense that the correction happens in this space. So I wouldn't be surprised to see the Nasdaq down further in the coming weeks, back down to that 1277 level, around there. Okay, around this support level down here. Wouldn't be surprised to see that tested. Okay, in the coming weeks. But the S&P 500, which is only really made up of half of those stocks, right? It probably won't pull back that far, right? So where we could see that 10% correction, and we saw this last time through March, we saw a 10% correction in the Nasdaq back then, but we only saw a 5% correction in the S&P 500. My gut feeling is we may see a similar sort of thing happen here through the month of May and into June. So I would not be surprised at all to see the S&P 500 back down near this 4,000 level. That's my prediction for the moment, for the next 2 to 3 weeks. But not seeing enough evidence of that just yet, right? So I'm not going short yet, guys, is what I'm saying here. That's my prediction. Waiting for the right technical signals to line up before I play that trade. Okay, I'd never get in unless I've got the signals that this view is going to play out. All right, so a bit early to call it, guys. Okay, there's a lot of analysts and people out there starting to say the May pullback's on its way. It's quite possible, it's quite probable, but let's just wait and see if we get the signals of that playing out. Okay, so tonight we will see the Australian budget at roughly 7:30. We already know most of the budget anyway, as it's all been leaked and put out there. So there won't be a lot of surprises. I'm not going to talk too much to that, as we will do a special podcast on that tomorrow and send that out to everybody on Thursday, okay? At this point, obviously, I'll just scratch on it, scratch the surface. Infrastructure spending, jobs. We've got the childcare side of things as well, and aged care are the main headlines I've been reading so far. Okay, so that just comes back to what we've been talking about for ages. Value stocks are going to go up. You're going to have materials do well. You're going to have anything you think infrastructure related do well. Banks should hold onto their strength for the year. Those types of stocks are going to do well. All right, healthcare, childcare stocks. Be looking at that space as well in the coming months. So look, let's get the detail tonight and go from there. But yeah, the budget's one of those things that we want to keep an eye on. Iron ore's slammed higher over the last week, guys. Okay, 230 US a ton. That's crazy stuff. Okay, at this point, it's mainly the momentum traders that would be behind it. I wouldn't imagine the steel mills would be chasing it at this price point. So look, you'll find China will probably meddle in this space and bring it back down a little bit, but I still suspect that iron ore is going to hold up quite high for the time being. We're not seeing the signs of Vale production really coming on. We need that supply to bring it back down. So therefore, I'm still very bullish the iron ore plays in the Australian market, BHP, Rio, Fortescue. I'm still very bullish those stocks coming into August. They're going to smash it in the August reporting, guys. I suspect you're going to get bigger dividends again, that sort of thing happening. Yeah, so look, iron ore miners in Australia will be doing very, very well throughout this period, guys. Okay, that also will help our budget this year too. The Australian government, I think, tends to project iron ore to be around that $100, $80 mark, $70 mark. They'll probably bump that up to 100 and get a lot more revenue from it than they would expect. Okay, and that will help them out a touch as well, right? But iron ore, yeah, huge movements lately, guys. I expect it to come back below 200 though. 230 is just a bit over the top. But crazier things have happened, right? Okay, so China tensions are always simmering in the background. There's a few headlines around today suggesting that a few of the Chinese importers have been told not to import Australian natural gas. Okay, so yeah, look, it's going to be interesting to see whether that plays out or not, guys. Okay, that could affect the energy sector here, as a lot of our energy stocks are predominantly in that space. We saw this happen with coal, though, and we managed to find buyers for our coal. So let's just see what happens, right? But those tensions in the background, it's always simmering, right? And that's always a reason for our market to pull back a little bit too. So keep an eye on that. It is May, right? The big hope of further upward movement, obviously, in equity markets is more stimulus, more stimulus, more stimulus. We're going to hear more and more details come out of Biden's next run of physical stimulus. Okay, so let's just see how that plays out in the coming months. But any news around that's going to help. And then, of course, it's all about vaccines versus COVID. Right now, yeah, your broader investors are pricing in economies reopening. Therefore, you're seeing strong buying around the banks, around miners, around anything infrastructure related. There's a general rotation out of stocks that did well during COVID into stocks that will do well after COVID. Okay, and that sentiment's all coming from this vaccine rollout. Now, what did we see, right? Vaccine rollout in Australia is not doing as well as expected. All the travel stocks have fallen off, okay? So, you've got definitely mixed mood out there. Some countries are doing better than others in their vaccine rollouts. Obviously, we're a bit behind at this stage, but we're also way in front in the sense of having the virus under control with all the lockdown measures and things that we've done. So look, it's an interesting space out there, guys. But nonetheless, as long as there's more stimulus coming, as long as those vaccines are getting rolled out, the market should continue to rise over the medium to long term. Short term, though, obviously it's May. The markets have run into May, which all adds up more and more to me that we're going to see a small pullback. So, as I said before, though, I don't think that pullback is going to be completely major. If we come over to the XJO, I see 4,000 XJO, I think would probably come back to around about this uptrend in the red here, or around the 69 level. I wouldn't imagine it'll go much beyond that. Okay, so I'm expecting May this year to be a small pullback, and that's it. I'm not expecting anything major. But who knows, right? It's an incredible year. It's a year of, we're the year after the election. Usually this year in the US is very bullish, okay, following an election. You may not get much of a pullback at all, right? So be open-minded, wait for the signals to play out on the technicals before you trade the pullback, okay? All right, so I'll leave you with those thoughts. Thanks for tuning in. Take care and bye for now.